Hi everybody, thank you so much for coming. My name is George McDonaugh, CEO of KR1. KR1 was set up so that people could gain access to the token economy, as we call it, which was an emergent property of a particular kind of blockchain, which I'll get onto in a minute. We were the first public institution to look specifically at tokens. So far, I think if some of you know the ICO world, you'll know that it's exploded in terms of the amount of money that's moving in, and there are a lot of regular VCs in the world who are looking at it very closely because it's soaking up quite a lot of their time, should we say, in terms of the amount of money that's flowing around. So in order to really understand what KR1 does and what we buy, I thought I'd spend this evening, a little bit of this evening, just trying to explain why tokens are valuable. I think you'll all have heard of Bitcoin, which was the first blockchain. It does have a token on it called Bitcoin, and the blockchain for this particular asset is quite simple in regards to the Ethereum that came later. And really it's a decentralized ledger, distributed ledger that keeps track of who owns these assets. So that took about 8 years to get going and emerge out of various economies, but has since become a medium of exchange or a store of value to some degree, although it's clearly still very volatile. A young gentleman called Vitalik Buterin, who was very early in this world, decided to take the blockchain one stage further and create this project called Ethereum. And Ethereum has similar properties to Bitcoin in the sense that it's decentralized, permissionless, global, but he created it in a way, or they created it, it was a large team, they created it to allow things called smart contracts. And smart contracts are packets of code that can be uploaded to the chain and can process it a bit like a server. So the best way to think about it is Bitcoin as a Nokia phone. It does what it does very well. The battery lasts and everyone can talk for hours on it. Think of Ethereum a bit like an iPhone with lots of applications on it. So what we do at Kryptonite One is we go through this world of dApps, or decentralized applications, that are being built on this kind of decentralized blockchain architecture. There's a few of them out there. Ethereum was the first. It was the one that gained most traction. It gained most traction in terms of developers. All of these things are open source, and they attract certain kinds of developers who are very interested in producing these kinds of applications. So when a company produces a stack of smart contracts that sit on the Ethereum chain, they can also produce a token that is unique to that project. So I can build things that look and feel very much like regular internet companies, eBays, Betfairs, things like that, but I'm coding them in these smart contracts, and the Ethereum blockchain is effectively the server of those that code. And that has some really interesting properties to it, especially if you are interested in things like jurisdiction. Very often when you have a company that's dealing in perhaps gambling or gaming, jurisdiction is very important. And jurisdiction is understood to be where your data server is. Well, if your server is in the cloud, that produces some very interesting questions. So the best way to discuss why a token is valuable, I thought I'd give you an example of a company. I have no affiliation to this company, but it's the best way of describing why a token is valuable. The market value today of this token, which is called a reputation token, which is part of this project called Augur, which is a decentralized prediction market. Today's value is $55. If you were around at the ICO 2.5 years ago, you could have picked up the token for 41 cents. It's hit an all-time high of $110. Why? Why on earth would something have that kind of multiple to it? Well, Augur is, like I said, a decentralized prediction market, which means that it is a layer of smart contract code that will be uploaded to the chain. It's not quite there yet. And it allows anyone to come to that platform and create a market on any future question. What then happens is people come to that market and they buy shares in the outcome of that market. So a good example might be, will Oprah Winfrey beat Donald Trump to the White House in 2020? And they will create a market, yes, no. Now, depending on the liquidity in that market, if there is many, many millions that can come through. Now remember that this is a decentralized stack of smart contracts that no one owns or runs. It is completely permissionless. Anyone can come to this platform and interact with it, as long as you've got an internet connection and as long as you know how to get hold of some ether. The idea behind it is that when you have really huge liquidity in these markets, you enter into something called the wisdom of the crowds. And currently, we've had prediction markets before, but they're centralized prediction markets, and very often you cannot get the kind of liquidity in these markets that actually create some kind of signal. The hope is that in a decentralized version of this platform, the liquidity could be very, very significant indeed, and hence why it's a prediction market. You might actually be able to ascertain from the global people who are betting their money on the outcome what the actual outcome might be. And it's also worthwhile just remembering that this is all anonymous. So people can come to this market and bet on any information that they might have, which I think is going to be rather disruptive. So why the token? So the machine, the decentralized packet of code that sits on the Ethereum chain does not know who won or who lost once that election is over. So it needs to program the behavior of token holders to elicit the information to the machine. And they do this by a reputation token. So 2.5 years ago, they did an ICO, and they sent out 11 million tokens to the crypto heads, as were known. And the idea is that as these shares are traded on this platform, they create a little fee for each transaction. So it might be that another email hack happens and suddenly Oprah Winfrey's chances aren't quite what they were, and I will sell my shares to the other side of the market, in so doing creating fees. The market creators, when they come and they write that question, they are gaining 50% of the fees from whatever market they create. The other 50% is spread out across the reputation token holders in line with how many tokens they have. And in return, those token holders have to answer the question, who won and who lost. They have to tell the machine who won and who lost. So this business in itself doesn't have anyone who owns or runs it. The only token of value in this company is the reputation token. Now, if one can have a think about what Betfair does, one can have a think about the jurisdiction of what Betfair does, and then one can imagine that if the trend continues whereby people enter into the market of cryptocurrency, something like this is very interesting to people who spend their lives trying to work out what ICO is going to go up and what ICO is going to go down. But of course, it has wider implications in that you could bet on any financial institution in the world, any NASDAQ, any Nikkei, any Dow, any commodity, anything. The weather patterns, you can hedge your farm if you're a Peruvian farmer and El Nino looks like it's going to hit you. Who knows what human beings are going to do on this thing, but I find it absolutely fascinating and potentially incredibly disruptive, depending, of course, on how the regulatory world take to something like this. So that's Augur, that's the reputation token. KR1 as a company buys those kinds of tokens round the clock because they are companies in every vertical in the world almost. You've got gaming, I can't quite see the top bit, but gaming, social, finance, insurance, data, and they go on and on. And these are all decentralized applications that are building in these verticals that all have a token attached to them. And they're very similar to Augur in the sense that anyone can participate. And the only token, the only essence of value in this company, because there is no IP, there is no equity, because everything is open source, everything is infinitely copyable. So the only thing that you need to think about when looking at how these are successful is how big the network is, how many token holders are there, because it's all about network effects. And so first mover advantage is very, very big in this space, but also how the community of those token holders is run, because the token holders very often have some say in the governance of these products. So these aren't all KR1 investments, but certainly some of them are. This is in the casino software space, which is fascinating because they're using the Ethereum blockchain to create provably fair gaming. I don't know if any of you are casino aficionados on the internet, but clearly they're black boxes, and one hopes that whatever dials are dialed in are in your favor to some degree. With Funfair, you know 100% that you are not being how would you say, diddled. And that could completely change the way that online gaming happens. Status is a decentralized WhatsApp, which envelops Ethereum-based protocols inside of it. Melonport is a decentralized hedge fund, so anyone on Earth can become a hedge fund manager, managing cryptographic assets. I can send money to send cryptographic assets to any fund manager. All of their past successes are on the blockchain, so it's all entirely visual, transparent as to how they've performed. EtherRisk is a fascinating company creating smart contract insurance. So before I get on an airplane, I can send an Ether token to the smart contract. The smart contract will read the oracles in terms of the flight data. And if an airplane is delayed, you get an immediate Ethereum payout, no human beings involved at all, and so on and so forth. Now, again, the thing to remember here is that it's the token that's valuable. So at KR1, what we do is we try to get into a project right here at the very earliest stage. So we're talking to teams, we're looking at their white papers, we're trying to understand the space as a whole and where their project fits into it. And we will take an allocation of their tokens very early on for seed funding. We will then help them on their way as they go to a pre-sale, where they strategically line up various institutions in the crypto space as a signal to the wider market that what they have and what they're producing is viable. They will then have a token sale where they will send those tokens to the market. The market very often can decide, depending on the mechanism that they use in their token sale, they will decide, the market will decide the price of the token, but also it's possible to just say what the price of the token is and the market will agree with you or not, depending on how your token sale goes. And then those tokens can get listed on the secondary markets. VCing, like, it's not really the best way to describe what we do at KR1. So it is seed funding, but it's so quick because these tokens become liquid so quickly. So we can get into, we have a buy and hold strategy mainly, but we can get into a project sometimes here or here. This is slightly longer, but here. And the token can be listed within a month, and it can have many, many multiples of millions of volume running through it within a month. So we can take out our investment. Those tokens that we have left over, we put in what we call the trophy cabinet, and we can repurpose that money into another project. So we've been going 2 years. We're up to about 28 investments. Nearly all of them we have come out to some degree, and so our pot of finance stays relatively stable in terms of being able to move finance into more projects. This is the size of the ICO world that we currently have. I'm not sure what's going on, but you can see what's going on. So this was 2014. In blue is Europe, and so this has just been a huge expansion of money moving into the ICO space. So these are people falling over each other to try and get hold of these tokens, because if some of these applications become the bedrock of the decentralized internet that is people think is forming on these kind of smart contract blockchain architectures, once these companies get going, they're very, very difficult to catch because of the network effects. So for example, if you could imagine a decentralized Facebook, which is completely flat, i.e. there is no Zuckerberg, there is no architecture, hierarchy rather, the decentralized version of Facebook, where you own your data and you sell your data to advertising companies who are coming to the network, well, that's unbuyable. You can't buy a network, because to have bought the last token is to kill the network. So once these things get moving and once they gain significant traction, owning that token can become incredibly valuable. So some notable investments. We went into a Mise Go, which was fantastic. We bought that at $27 a token. We have sold that at an average of $26 a token. We had bought Melonport, and we got out at 59, so we bought that at 481. And Funfair, this is the multiple here. So that was a 26x multiple, that was a 12x, that was a 4x multiple. And Amiso goes a £1.5 billion project now to market cap. They're a sort of payment system, and they have McDonald's as a client. So here's an example of the kind of projects that we get into and the kind of multiples that we can see. And you can find us on the NEX. That's what we do.